Welcome to another episode of The Financially Free Investor, where you will learn information and strategies on how to become financially independent by investing in real estate, something that is not taught openly in our society today. Financial freedom matters so you can live a bigger life, retire early, and do what matters most to you. Get ready to hear tried and true methods to becoming financially free with your host, Jordy Clark.
Hey everyone, welcome into another episode of the Financially Free Investor. Today, I'm pretty excited about our episode. We've got a new investor coming in, buddy Jonathan. We met actually when we were both living down in Chile. So kind of cool to reconnect with you and see what you're doing, just after, a decade after we were down there. Yeah. So how's it going?
It's going great. Excited for the opportunity to be on this podcast.
Yeah. Sweet. So Jonathan, tell us a little bit about yourself, maybe a quick 2-3 minute synopsis of who you are and what you're up to.
Awesome. So I live in Arizona, and that's where I do my investments. I currently have a full-time job. We have a family-run business. It's an HOA management business, and keeps things exciting, to say the least. And I'm sure there's plenty of investors out there that know the dealings of HOAs. But that's what I do for a full-time work, but also have an investment property in Arizona. I have a wife and a daughter and a baby boy on the way, due in August. So I'm your typical, run-of-the-mill guy trying to find ways to make more for my family, so that way we can be financially free.
Oh man, that's so good. Well, let's jump into that. How did you get started on your journey to financial freedom?
That's a good question. So it started out of college. I had the desire to own property, if nothing else, for a primary residence. And so I was living frugally with roommates, trying to save up as much as I could, and then found an opportunity of a brand new build, actually, back in 2017. Purchased condo, 2-bedroom, 2-bath, and didn't realize it at the time, but I was house hacking by getting a roommate in there to cover a decent amount of the expenses. And so I was able to keep saving after that. And so had roommates from 2017 until 2019 when I got married. Had the wife move in. So we were living in that same condo. I originally had an FHA loan on it, and was able to buy that down and refinance to get into a conventional loan. And then, like everyone else, we saw the market just kind of zooming through and saw an opportunity there and decided that we were going to do things a little bit differently. And I know, we probably could have house hacked again, but we really wanted to find our forever home and get into it when we thought the market was right. So we sold the condo, used those funds to purchase our forever home. And we're able to get in at an extremely low rate at a good loan. And so that was in 2020. And then in 2021, just last year in November, we decided to finally take our first stab at owning an investment property. And that was really exciting. And I'm sure we can dig deep into it in a little bit, but just the background of it is it's a condo, 2-bedroom, 2-bath in a really good part of town near us, about 10-15 minutes away, which I personally really like. I like having a rental that I can control and visit frequently if I need to. And we're using the BRRRR method to the best of our abilities. We'll have very little into it. We bought it for $187, and we're refinancing for $245, closing that deal for the refinance next month and getting all that cash back out.
Oh man, that's awesome. And yeah, I'll maybe ask a couple questions on that, just because, you guys are just getting started out. You owned a place for a few years and then realized, hey, maybe we want a little bit more elbow room. As you get married and start having kids, you're all of a sudden realizing, hey, we need space, which is totally normal, little backyard. So you move into that. I'm assuming, I'm not an accountant, but you probably took most of those, if not all of those gains that you made on your condo tax-free, right? And then you were able to buy your house and you had extra money that you were able to invest, right? So then you find this condo. It was a good deal. You buy it. you did the BRRRR method, right? Which stands for buy, rehab, rent, refinance, and repeat. And the cool thing about this method, you and I were messaging back and forth on this is, and like you said, you're able to pull out all of your initial capital, right? So you bought it, fixed it up, made it worth more, almost like you flipped it, right? But then you just flip it to yourself and refinance, which is awesome because again, you're not paying taxes. You get to control an asset that somebody else over, the next 30 years, and we don't know where inflation's going. We don't know where interest rates are going. And, we don't know where the housing market's going, but in 30 years, we both can agree that that condo is going to be worth significantly more than it is today. Right. And the beauty is now that you're $0 into that, somebody else is going to pay that off for you. So, we'll say in 30 years, it's worth double, which it's probably going to be worth way more than that, but it'll be worth $500,000 and someone or, multiple tenants would have paid that off for you and you would have cash flowed more, right, over the years as rents go up.
Exactly. And you know what? It was at a time when everyone said, hey, you're crazy for buying because you're at the peak of the market and there's no way, you're going to make this work. And, I was listening to that for a long time, for a while. I was saying, oh, I'm going to wait. Just like everybody else, I'm going to wait. I'm going to wait. And then finally I realized, you know what? If the numbers make sense, why wait? And on top of that, I'm a long-term investor. I don't play the short game. I'm not looking to make a quick buck just in, the first month. I really want to see those gains over the years. And actually one of the main reasons I'm wanting these properties now is because I want to have them paid off by the time my kids, hit 18. So that way, just like Brandon Turner had as an example, the moment I heard from him that he wanted to buy properties for his kids and have them paid off by 18, I decided, you know what, I'm going to do the same. So that's our goal. It's a long-term strategy and who knows where the market will be in 18 years, but that's where we wanted to be.
Yeah, man, that's so good. And to your point, let's see, since 2016, so we're 2022 now, 6 years. So for 6 years, we've been at the top of the market, right? And it keeps going up. And the reality is no one knows when we're at the top of the market until, it's already behind us. And then it's easy to say, oh yeah, that was the top of the market. To your point though, like you took action, right? Like there's so many what ifs. And I'm sure you guys had a lot of people also say like, oh, you don't want to deal with tenants. You don't want to deal with toilets, right? Like what a hassle. But you think, hey, in 18 years, you're going to need to pay for college or weddings or so many other things, right? And if a tenant has paid something off for you, then that's way more powerful than you trying to save $200 a month, right? Plus you're getting paid along the way.
Exactly. It made financial sense. And so I think we'll get into, question, what could I learn better? But that goes into that is I wish I would have known that sooner.
Yeah. Well, maybe let's go deeper on that. So what's the one thing you'd want to tell someone who's working towards financial freedom?
I would say make sure you study, but don't get that analysis paralysis where you're just sitting and watching and waiting for so long that you miss your chance, because there's going to be a lot of chances along the way. It's not just one property that's going to make or break your opportunity. It's just studying the market, making sure you feel comfortable in that deal, and having mentors and people you can reach out to and say, hey, I've done some research. This is what I'm thinking. Can you help me verify? I wish I would have listened and done that. I had some people that were wise investors that said, why aren't you buying right now? And, back in 2015, 2016, it was because I didn't have a dollar to my name. And I thought that because I didn't have a dollar to my name, I couldn't, invest in anything. So I had to rent. But I wish I would have known that there are alternative options to get yourself into a property, because gosh, if I would have invested in 2015, right out of college or even in college, find a place and rent it out to other roommates, goodness, my life could be very different, but I'm happy where it is now. And I'm excited for, what I'm doing with my investments now. But yeah, that's what I would do going backwards.
Yeah, well, the cool thing is, I mean, we're about the same age. And so, you're not going to have that same regret in 10 years because of the action that you took today, right? So where there's a lot of people who maybe they are in your shoes and hopefully this message reaches them, but maybe they're selling their first house ever and they're like, hey, no, we need to put down, all of our equity so our payments as low as possible. What would you tell someone like in a situation like that?
I would say, again, run the numbers, make sure it makes sense for you and your family, because at the end of the day, everyone has a different opportunity and different option for them. So it really just depends on what makes most sense for them. Like, looking at our house right now, we're at plus 300K, even buying in 2020, and now we're in 2022, but it's all theoretical dollars. It doesn't matter unless I sell the property. So, I think there is value in buying down a rental over time, just like I want to for my kids when they turn 18, but it needs to make financial sense at the same time. And my hope is that, as I get to rental 2 and 3 and 4 and 5, that snowball starts paying off, the original one, and then gets to the second one and third one. That's the way it works. And I'm sure that's how it's been successful for you. So for those that would be in that situation, I would say, look at the numbers, make sure it makes sense, but, try to snowball it to pay off, rather than, sitting on one property and deciding I'm going to pay off this one property, rather than utilizing other properties to pay it off and making even more in the process.
Yeah, no, and that's so good. And there's so many strategies that come along with this that we could go into, right? But I love that you just go to the fact of, look, buy the assets and then you'll be able to figure it out along the way, right? If you don't buy an asset though, you'll never have the options. So I love that, man. That's awesome.
So, it's interesting because there's probably some people that'll say, hey, what happens if the market tanks in, 2 months, and suddenly we're in a recession just like we were in 2008. And now my condo that was, valued at 245K is now back to, 100K or something. Again, it's all theoretical dollars until I sell the property. As long as my rents are covering my insurance, my mortgage, my taxes, it's going to make sense for me regardless. So I feel like some people get trapped in that thought process that, if my value is half, like what happens? It doesn't matter until you sell.
No, and that's really cool. And especially how you bought that property, right? You're essentially no money in this deal, right? As soon as your refinance is done, you've got no money in it. So really, what's your risk?
Exactly. That's the exact process that I thought through. And people may ask too, like, how at this point do you find properties and deals because of the market the way it is? This first condo was one of the Zillow breakdowns, where Zillow was churning their properties out because they realized they were not in the right market, that they were not doing it properly. And so we took that opportunity, we ran with it. We ended up being one of the only people willing to invest in this property, and it worked out great for us. And now, by the way, we're, looking into a second property in that same community, same condo complex, that's now at auction. And so we're hoping to buy that at auction again at a great discount and BRRRR again. And we'll use that exact same investment that we had in the original one to pay for the second one. And we'll be refinancing after 6 months and get that money back out and just repeat the process.
Yeah, man, that's so good. Cause that same, we'll call it a hypothetical $40,000 or $50,000 that bought you 2 assets, right? And if the numbers work out to be the same and everything is a perfect world, which stuff will change and that's okay. But man, that you were able to grab your money back out again, but you own 2 assets now. And so you're recycling your money, right? And so if you just think about even just the loan pay down that's going to happen on 2 loans versus 1, and yeah, there's going to be a little extra headache because now you're going to have a second set of tenants, and you'll just deal with other complexities that happen. But even if you got most of your money back out the second time, then you're able to take that capital again and go and buy a third one, right? And how many times can you reuse that same initial investment because you're buying things at a discount that makes sense in areas and like, and that are going to be worth more in 10, 20, 30 years?
Yeah, the answer is as much as I want, right? And that's the beauty of it too. If my goal was to become a billionaire, right, then I would get to that goal by reaching these certain plateaus by then. And personally, that's not my goal. I don't want to be a billionaire, but I want to be financially free. I want to have those assets for my kids. And so each person's going to have a different goal, like ultimate goal in mind. And so I'm gonna keep burring. I'm gonna keep snowballing the same 40, 50K that I used for the first process until I reach that point. And then, maybe I will say, hey, my new goal is to become a billionaire. Who knows? But it's one step at a time.
Yeah, man, it's a fun game. And there's a lot of different levels. And, there's like, you're doing this with condos, and for me, condos don't make sense, but for you, they make sense, right? And that's the cool thing about real estate and even personal finance and financial independence or freedom is everyone, if you just focus on what's important to you instead of, shiny objects syndrome and, hearing, oh, someone's doing something cool in storage units. Well, I'm going to go into self-storage or, residential assisted living, or like, there's so many different niches that you can do this in, but the principles remain the same, right? Where you're buying something undervalued, you fix it up, you make it worth more, and then you get your capital back out. That's what all of the really good investors do. So, I mean, maybe walk us through a little bit more. Were there any fears you guys had other than, the normal ones with tenants, or maybe that was your fear, but when you guys bought your first condo, the investment property, maybe walk me through what you had to overcome, what you had to listen to, what you had to learn.
Well, it really took a while for my wife and I to be on the same page as to what that looked like and what it meant to be a landlord. Telling my wife, hey, this 50K that we have raised and saved over the years, I want to use it. That's a tough ask of a spouse. So it took a lot of conversations, a lot of discussions to figure out, okay, what does that look like? How do we get there? What's step one? What's step two? And so for us, it started with the discussions. And then, I started saying, okay, I'm going to show you the math of how it works from what I've been told by others. Because again, having never experienced it myself, I wanted to at least show the numbers and hope that it made sense that way. So after looking at the numbers, I said, this is what it looks like. But at the moment, we were saying maybe we don't refinance, if we don't see the numbers going back up. Worst case, we have our 50K in an asset that is paying it off over time. And I told her that that's the worst case, but I was looking at the numbers. It made sense that refinancing, we bought it at a good rate that we could refinance pretty quickly. And so in the end, we ended up making that decision, but it was after a conversation with our lender to make sure that the numbers made sense, was a discussion with our realtor. We have a realtor who does work with investors, which I think is so important. So that way they can walk you through it. So that way you're not working with somebody who just wants to get paid that commission and walk away. So those were really the steps that it took. And then finally the leap of saying, okay, here it is, here's our 50K. We're putting it all in. Worst case, we sit on it for a while, but it ended up working out really well for us.
Dude, that's totally something that I did not do on my journey, right? Is my wife and I, we weren't on the same page for a little while, and it can cause issues. So the fact that you guys were able to get on the same page and go, okay, we're going to take this leap, take the risk, right? And it's only risky if you've never done it before. Because as soon as you do it, I'm sure you experience this. You're like, oh, okay. Like no one died. We still have all our limbs. We're still like, life is moving on. Right. And it becomes way less scary, or, whatever you're building it up to in your mind.
It becomes real. And again, the reason it is so scary is one, because most of us, at our age have never seen $50,000. And so for us to finally get to what is considered a peak at the moment in terms of savings, essentially risk it, right, is what the world makes you think you're doing, then it's a big ask. But the funny thing is those same people that were saying, what are you doing? Like, why are you buying in this market, the crazy market, so volatile, are now saying, how do I do it, for myself? And I'm like, oh, okay. I think fear drives a lot of us away from ambition. And so it's a lot easier to not do anything at all than to take a step, take a leap, And so, that's what the listeners on this podcast have to do, is just take that opportunity.
Let's wrap it up with this last question. Knowing what you know now, what would you have done differently on your journey?
I would say, as most people say, start earlier and have conversations with people you trust on how to make it happen. I think when people start actually getting the information in front of them and making those decisions and not waiting, because I'll admit it, I did wait. I waited quite a bit before I finally jumped in. So it's really getting in front of people that know and understand. And that's what I really wish I would have done differently, because I would have been buying properties in college and, renting those out and really snowballing faster based off of that.
Yeah, man, so good. Well, Jonathan, it was super fun to catch up with you again. Thank you so much.
Thanks so much, Jordy. I appreciate you.
Okay, we'll see ya. Thank you for joining me for another episode of the Financially Free Investor. If you found value in this episode or know someone who would find value in this information, please share with them, subscribe, and send us a review.